Hey guys, welcome to the Financial Mail's post-budget webinar hosted in partnership with Paternoster and Citadel. We have an esteemed panel, as you know, and I think the guest of the moment will be the man of the moment, the Finance Minister Enoch Godongwana, who delivered his first full budget speech yesterday. Our Financial Mail team, as is tradition, has worked till wee hours last night, putting together a specific edition on the budget, delving into all the specific details, and it's a cracker. Claire Bisseker, who's on this call, she wrote the cover story on it, describing it as a Goldilocks budget delivered yesterday, which wasn't too hot, not too cold. And I think that's the sort of thing we'll get into in discussing it when the minister joins us. He's just stuck on another breakfast meeting at the moment, but he's going to join us shortly. Our esteemed panel, hosted by Paternoster's Richard Calland. And on the panel, we have Claire Bisseker, who will be able to tell us all about Goldilocks and how it's not just for children. And Citadel's Chief Investment Officer, George Herman. So guys, thanks very much for joining us. It's going to be a fantastic discussion, I'm sure. And thanks very much to the Arena Events team for putting it together. Shirley de Villiers, who works for the Financial Mail and is the person who made sure that we met our deadlines last night. She's the reason we were able to actually get any publications out. That's quite scary, otherwise, how incompetent I am at doing that kind of thing. And guys, welcome. It's going to be a great discussion. And Richard, perhaps I should hand over to you to set the scene for where we are and your thoughts on the initial budget speech yesterday.
Well, thanks very much, Rob. And excuse me, thank you again for this partnership and to have the opportunity to work with you, your colleagues at the Financial Mail, and of course our clients and partners, Citadel. Last week, many of the people on this call will have either watched live or later watched the recording of our preview. And the preview really, I came out of that inspired by the conversation and the quality of the panel, but rather depressed at the kind of lack of options and the kind of real fiscal crunch and squeeze that the minister and the country faced. Yet, yesterday afternoon, I was strangely cheerful. I mean, I suppose it's a useful lesson for life. It's better to lower your expectations ahead of something rather than raise them too high. And I'm not going to frame this conversation too much at this stage. I think I should wait for the minister to join us so that he hears what I say rather than sort of learns it later. I think that's fairer to him. So let me, right at the outset, throw the ball to my two colleagues on this panel. Claire, when I read your story, which Shirley kindly sent through at around midnight last night, your cover story, the Goldilocks thing, I'm not very good with fairy tales. So explain why you used the Goldilocks metaphor, because I think you were saying neither too hot, nor too cold. How does that come out of Goldilocks? Just explain yourself.
The Goldilocks and the three bears. The papa bear's porridge was too hot, the baby bear's porridge was too cold, but the mama bear's porridge was just right. So it's a kind of sweet spot. I think that's what I'm saying. We're in a position now where we've been incredibly lucky with this 180 billion rand revenue overrun, and it's enabled the minister to do three major things with this budget. He's been able to bring debt stabilization forward by a year. And it's lower, it's 75% of GDP now, not 78. He's been able to extend the SRD grant for another 12 months and pay for it without raising taxes. In fact, he's been able to provide quite significant tax relief, and that's where the real happiness comes from the consumer point of view. So it's a kind of crowd pleaser, really. It's a consumer and business friendly budget. And so really it's about the near-term debt situation and fiscal metrics having improved really significantly, but the medium-term fundamentals haven't changed. And I think that was the strong message from your previous webinar, where we were hearing that we've still got very low growth capital, very high interest rates and government borrowing. So the fiscal position is still weak when you look over the medium term. And I think that is the major theme of the budget.
So we'll come back to that idea with the minister. I think it's again fair to allow him to comment on that. The idea really that although this was a crowd pleaser with much more good news than expected, it's really a short-term kind of palliative that in the end, the structural risks, the fiscal risks are still there. They've just kind of been put off for a year or two. But let's see what the minister says about that. So I think he was very interesting on that point. George, let me turn to you immediately. I know you've got a sort of 2 or 3 minute commentary. Again, hold that back if you don't mind until the minister's present so he can hear it and respond if he'd like. Just tell us about the market reaction. Did the market like the porridge?
Claire, that was a magnificent analogy you used there. And Richard, to answer your question, at the time of the budget, the markets did take kindly to the comments. There was nothing surprising in there. It was a blend of good news for where we are right now, but acknowledging that it is probably short-term in nature. But unfortunately, Richard, it does get mixed if you extend the time frame to this morning, unfortunately, because we have to understand that we are nitpicking a domestic budget here, which is balanced, neutral, maybe slightly positive, as Claire said, in the current context. But the reality is 2 of our emerging market universe peer groups are involved in a war right now, and the whole risk scene for the world has changed dramatically this morning. And so, interpreting the markets hardly, it's not even 24 hours later yet, the picture becomes mixed. However, overall, in terms of the budget, there was no surprises there, and we often compliment both the Minister of Finance and Mr. Netanyahu at the central bank for how prudent they manage our fiscal and monetary affairs.
Thanks, George. And of course, you're referring to events, dark events in Eastern Europe. There's been a sort of various conversations on Twitter in the last few days about whether it matters to us and whether it matters to Africa. But if, in a worst case scenario, this escalates into a wider conflagration, a world war of sorts, then it's bound to affect everyone everywhere by definition, isn't it?
Yes, absolutely. Now, to be brutally honest, for South Africa, it's probably there's the negative knock on that risk sentiment gets reduced. We're seeing that in our stock market futures opening this morning at 2% lower, just shows that risk sentiment gets pushed lower. But on the other hand, we are the beneficiary of some exports of certain commodities where we typically compete with Russia, whereas now we would become the predominant exporter of those. So there's good and bad for all of this in South Africa, but it's never good to be in a global war situation.
Claire, back to you. Were you surprised by this sort of apparent ability to find crowd-pleasing announcements? Surely the windfall from the commodities boom was known sufficiently in advance. Surely it was possible for people like you and other economists and fiscal analysts to see that opportunity. And yet the build-up, as we had in our preview webinar last week, was really quite gloomy.
Yes, I think you're quite right. Everyone did forecast the big revenue overrun. Some were even more optimistic than what finally transpired. The gloom relates to the things we're not dealing with. It relates to the kicking the can down the road syndrome, which we're very familiar with in this country. And that is because we're not dealing with 3 big spending pressures. And they were there at the medium-term budget in November, and they're there again now. The first one relates to the extension of the SRD grant. All economists have put into their 3-year budget forecasts at least 45 billion rand expenditure every year for the extension of the SRD grant, because we're assuming it's going to be carried through, that it's inevitable. The Treasury can't do that. So that makes its budgeting, it lacks credibility on that point. The other thing that is bubbling up is the public sector wage bill. The Treasury again has budgeted for a very conservative 1.8% increase every year for the next 3 years. It can't do anything else in the absence of a wage settlement, but we all know that that's extremely unlikely. Last year, the wage settlement came out at about an average 5%. So that's another point of lacking credibility for the budget. And then the third big pressure is the SOE bailouts, state-owned enterprises. There's nothing new in the budget for state-owned enterprise support. And while the minister is sending a strong message in not doing that, it also lacks credibility, because we know that, given our track record in this country, that it seems inevitable that there will be bailouts. So economists expect all three of those pressures to materialize. And that's where the sense of angst comes in. And the other kicking the can down the road point is about the fact that 2022 was supposed to be the moment. Have I frozen? Am I still there?
You're a little wobbly, Claire, but not too bad. Do press
All right.
on.
No, I was just going to end off saying that
yes,
2022 was supposed to be the big, short, sharp, crunch year for fiscal consolidation. That has now been kicked over to 2023. That is now, in the terms of the budget plan, that is when we get a really sharp contraction in spending. But the timing looks really bad in terms of the war in the Ukraine that's looming. And so we've got extremely uncertain global environment, coupled with huge volatility on commodity prices. So we've got a less supportive global. Sorry, shall I stop?
No, I didn't want to stop. It's just I'm thinking the minister is joining or is about to join. I see. Can we just have an update on that? Don't want to. There we go. I sensed he was with us, but Mary Maruma, I know Mary, and Mary is with the ministry. So, Mary, if you could kindly unmute and present the camera as well, it would be absolutely lovely to have the minister visually with us as well. Okay, they're obviously wrestling with the challenge of Zoom. Claire, just on the numbers, can we just run through the numbers whilst we're waiting? It's quite useful to see. You know, I'm a lawyer, not an economist, so I hear, well, there's 182 billion extra you weren't really expecting. You've then got the nice little task of deciding where to allocate it. And as I understand it, the minister was trying to say, well, we're shifting, we're trying to get away from spending this money on interest on a debt. So we're going to close that as best we can, as fast we can. This is very promising. It says Enoch iPad. That Minister, you're obviously part of the iPad comrades, like your president, who likes his iPad. Good morning, sir. Good morning, Minister Godongwana.
Good morning. My apologies. The breakfast people and radio station took more time than I thought. My apologies.
No, you don't need to apologize. We know that the morning after the budget, there are numerous calls on your time. And we're just very grateful that you've been willing to agree to join our webinar today for the next 45 minutes that we have left with you. Minister, first of all, I'm Richard Calland, as you know. Good to see you again, Minister. I've got the pleasure of moderating this conversation on behalf of this partnership between Paternoster Group, Financial Mail, and Citadel Wealth. And we've just begun the conversation. We're kind of clearing away the trees, as it were, so that we could then go straight to you when you're able to join us. And we've been talking about how this was, in the language of Claire Bisseker, the economics editor of Financial Mail. Her cover story this morning is that it was a Goldilocks budget because you were able to give something in terms of porridge, something warm, something cold, but actually something in the middle. It was a relatively crowd-pleasing budget. Minister, what do you think? I don't know what you'd like to react to that, but what I'm going to do is put a series of 3 or 4 questions to you and then open it up to the panel. And at the end, you can decide whether to respond to what my fellow panelists, Claire Bisseker from Financial Mail and George Herman from Citadel, Chief Investment Officer, have to say. Minister, good morning to you.
Yeah, good morning, Prof. Look, I'll rely more on your questions than I don't have a prepared text.
Yes.
The key for me is this balancing act. People are saying it's a balancing act. How do we support growth in an environment? And on one hand, you want to support growth. On the other hand, you get massive inequality, poverty. How do we grapple with that issue at the same time? and how do you do these things, but in a manner which is sustainable fiscal sustainability. So is this tightrope we're trying to do in the context when first you have had the resources moved from departments. We make the point of about 257 billion rand moved to support ailing state-owned enterprises. So, which was beginning to affect service delivery functions. So, debt runs, debt service cost rising. So it's a challenge. So the first thing is fiscal sustainability, achieve that, move to growth, move to supporting incomes. And the best strategy to do that is to shift the resources away from these state-owned enterprises into correcting the baselines of departments. So it's very difficult maneuver, if I may say.
Of course.
Yeah.
And it's we recognize the challenge. And last week we had a preview webinar, Minister, you may have been informed, and all of the panelists on that, including Michael Sachs, who used to be in the Treasury, agreed there was very little room for maneuver. So you've managed in the last few weeks to find more room for maneuver than I think most people expected. I think, if I may say so, as a political analyst, your very direct speaking approach, the way you speak, the word I used with the mini budget TBS in October was you have a very gritty approach. And dare I say it, the aloe plants are not in fact missed. We appreciate the rather direct way in which you address the challenges of the nation. I think that is highly respected, Minister, if I may say so. But yesterday you sprinkled amidst the grit some good news. And it's clear that you managed to do that because of this windfall from the commodities boom, the 182 billion extra revenue that the government had. I'm tempted to ask as a question whether you intend to send Christmas cards to commodity traders globally and to mining company CEOs for the rest of your lifetime, because that was a real godsend, wasn't it? That windfall.
Yeah, that windfall. I don't know whether they will accept my Christmas card, because just at about Christmas, I got calls at about 6 a.m., particularly from the coal guys, because they couldn't transport 15 billion worth of coal to Richards Bay. So they may probably throw my Christmas card away because of the lost revenue.
But coal people aside, and we'll perhaps come back to coal in the context of the climate finance opportunity that has presented itself in November since the middle term budget. We'll come back to that if we have time later. The first question I want to put to you, and again, it's in the context of that extra 180 billion. You decided to put, as I understand it, 44 billion towards extending the SRD, the 350 Rand grant, for another year. Now, I think that the burning question I think that many people have in mind is, what is your long-term plan? You made it clear yesterday that any big change in social security safety net will have to be financed not out of windfalls, but out of normal finance, so to speak. Does your extension of the SRD indicate that you are, as a government, edging towards a basic income grant, or in fact edging away from it? I wonder if you could take us into your confidence and tell us what your thinking is about that kind of basic income support, given the high unemployment rate, given the low growth rates which you're anticipating in this budget outlook. What's the thinking here of Treasury and of government?
I don't think there's a uniform thinking in government on this issue. I would be misleading you, but let me start with the windfall. People forget that part of it we've already used. During the unrest in Gauteng and KZN, you'll remember we did adjustment estimates. And some of those money that came from that was from this windfall. And we put some of it into that with kind of 32-68 split. So that's one set of issues. Coming to the grant issue, is we make the point there that we don't, our posture is that the commodity boom is revenues are of a temporary nature. You don't have to pile permanent expenditures based on that. If you pile permanent expenditures, then you must know that once the community boom is gone, you need to find another source for that, which is unfortunately would be tax. So that's the point we're making. However, here's another trick, is that we are saying there's a lot of these grants all over the place. You've got extended public work program, you've got public employment program, you've got this, SRD, you have community development work programs, you have a whole range of these things. It's not the time to review all of this and say, I don't want to put the cart before the horse because we're going to put up a team to look into that. It's not the time to review all of this and say, we pay free for housing, we pay free for this, we pay free for that. It's not the time to consolidate all of this into whatever grant we want to do.
Thank you, Minister. So if I'm hearing you right, you're saying a final decision hasn't been taken. There's still thinking going on, but certainly at the moment, there is no intention to consolidate Social Security into one main basic income grant. That's kind of the state of play. So there will continue to be this patchwork quilt of grants.
I'm saying we will be putting up a team whose intention was, we want by the time we present the medium-term budget policy statement in October, that we might have had a view.
I see.
A view.
I see.
On all of this time.
I see. That's very clear. Now, on state-owned enterprises, another very important subject, of course, in the budget. Again, something similar. There you were very clear. You said tough love. And you, I think, music to many people's ears. You were saying, look, the age of bailouts is over. Although you did leave a bit of a space there for Eskom, because Eskom, I presume, is such a strategic asset. No?
Not Eskom alone. The reason we've mentioned Eskom in the budget is because of its unique nature. Eskom is unbundling. Because of that unbundling, some investors, that has unsettled a number of them as to where is this debt likely to settle? Is it with generation? Is it with transmission? Is it anything else? That's the first set of issues. Second set of issues is there's a view that whatever happens, there's debt which Eskom can settle, what they call distressed debt. Now, so we had to mention this thing because we've got to kind of signal to investors that whatever happens, we'll still be around to help Eskom. So that's why we've singled them out. But we have said, even Eskom and others, for us to come in, they've got to demonstrate, prove themselves that they are involved in proper turnaround strategies, restructuring, so that over time, one reduces dependence from the state.
I see. And this might be the right moment to interject in relation to that international climate finance. It's not yet a deal. It's been spoken of as a deal, but it's very far from being a deal. It's a political declaration signed and agreed in the run-up to Glasgow and the COP26 meeting in November. That was after your medium-term budget policy statement. And of course, even if the negotiations go well this year, it's going to presumably only provide finance from next year onwards. Do you see in that international climate finance deal an opportunity, $8.6 billion, assuming the terms are right, and Daniel Manele will now presumably be the person responsible for negotiating the precise terms of that. Do you see an opportunity there to help reset Eskom and even take care of the debt problem, which your predecessor says was the biggest risk on the South African economy?
Two things. There's two extremes in the South African discourse on the transition on the just transition. There's an extreme which people are saying is a coal kind of propaganda. There's an extreme which is think that we can turn everything green tomorrow, right? I think what we must understand, where is South Africa today? Right? South Africa today is 95% coal. Right? You can't tomorrow or in 3 years' time replace that 95% coal. Never. So let's start there. The second point is the 8.5 billion. No one knows who has it. It will be interesting to know when somebody says to us, here's 8.5 billion. First, Daniel has got to check who has got the who's giving us 8.5 billion on what terms, how much of that is grant, how much of that is debt, what are the terms of that debt. He's still going to establish that. All right. So let's assume for argument's sake, then he has established that. How long will that take us to? Will it be able to replace the 95% coal? The answer is no. Not in the next 10 years. All right? So what I'm trying to say in this climate debate, let's be realistic and say what is possible. How do we manage this transition? And we tend to think that we can manage it in the abstract. So when somebody says, let's not leave anybody behind, if you close Komati tomorrow and put whatever you think you agree, when you close the power station, mind you, are also closing the mine that supplies the power station. The number of jobs you're likely to lose is massive. How are you going to manage that? So it's that managed transition that we're talking about. It may well be that you will lose these coal mine jobs and power station jobs, but what are you going to replace those jobs with? So that's the kind of discussion which is missing.
Yes, Minister, I accept that. And of course, you're absolutely right that the deal, when it comes and when it's tied up, if it can be at the appropriate terms by Daniel Manele, will have to be what, to use the new development aid jargon,
Interesting to know
whole economy. It has to cover the whole economy, doesn't it? It has to.
It would be interesting to know from your reading, this 8.5 billion, who is giving us 8.5?
Well, thank you for turning the question back to me, Minister. That's good. I work in this area, and I don't want to get into it too much because we'll be distracted from yesterday's budget, but there's huge political pressure on the developed world to deliver on this 8.5. So they have to, it's been spoken of as the deal of the century, as historical groundbreaking, precedent setting. So they will have to come. And I think the money from 3 or 4 countries has been set aside in principle. But of course they, and this is part of the political economy of this deal, they have high expectations of what South Africa will be offering to do with the money. So there's the rub of the green here.
The former Minister of Environment, Vali Musa, makes an important statement. He says, you know what, with this stuff, we as Minister of Environment agree on all of this green stuff. Only to find we've not socialized this thing with our Ministers of Finance. We then say take a hike.
Well, you're absolutely right. This has to be whole economy, but also whole government. Just energy transition cuts across all areas of the economy.
That's why my worry. I've not come to a situation where I would say this is a whole government giving us this money and what are the terms. I would love to have it.
Okay, well, that's very good. And just whilst we're on the subject of the green economy, to use the, again, more jargon, yesterday you spoke of the carbon tax, of course, and that seemed to be the main fiscal measure that you were reaching for in terms of South Africa's commitments in relation to carbon emission reductions. What was your thinking on that? You sort of tweaked it a bit, you've taken with one hand and given with the other.
Look, we first and foremost were grappling with a long-term strategy. What does this mean, fiscal management in the context of climate financing? We're dealing with that question. And therefore, the carbon tax is but one instrument. But used in isolation is not going to be. We've got to look at a broader picture, is one instrument. And with it, we are just indicating to people that, look, first and foremost, you've got to demonstrate to the world that you're concerned about climate change. And these are the steps we're taking, among other things, is carbon tax. But you're also signaling not only to the world that we are doing this, you're also signaling to the economy that people must move in a particular direction. That's why we're saying, for instance, over time, this issue is going to become a barrier to trade. A non-tariff barrier to trade, not a barrier to trade. So it's going to be important that we're signaling also to industry that here is the direction. Otherwise, if you don't move, these are the consequences. Yes. So we're just messaging for now.
I've got you. And of course, South Africa is exposed with its high level of coal exports and the revenue that comes from that. You may be, South Africa may be blindsided by shifts in global markets and global regulation. Just moving on, because time is passing. The public sector wage bill, you list it as one of 4 main risk factors for the middle and long term. You put aside, I think it's 30 billion of the windfall in order to pay for, no, 20 billion, forgive me, of the windfall to pay for the public sector wage deal that was done last year. There's another round on the immediate horizon. What's your, share your gritty thinking on this, because there's a lot of people probably on this call and in the country who feel they're not getting value for money from government, to put it rather frankly, and who I'd say there's probably quite a few people on this call and in the country generally who feel that the state is not delivering services at the level it should be, and why then should public sector workers get good and generous pay rises? On the other hand, the other view is, well, public sector services, if you're going to shift structural reform and get more out of public services, public service employees should be paid properly and should be paid well, particularly coming out of a pandemic when health workers have been at the front line. Again, what's your thinking? What do you hope to get out of the next round of public sector wage negotiations?
Let me say part of the difficulty is going to be unfair to say there's no productivity in the entire health sector, in the entire public service. Health workers are in the forefront dealing with the pandemic. and we can say so around a number of other sectors. So what is the problem? The problem, as a percentage of budget or as a percentage of the economy, our wage bill is high. Now, there's disagreement as to why it is high. The unions are saying, no, it's not the headcount. But whatever the source of it, we need to deal with it. So I've said we have got a meeting with unions from 28th to 31st of March. I don't want to prejudge that meeting. But from our side, we would like to see a solution coming out of that meeting that says, this is how we should address this matter.
Thank you. One last question from me, and then I'm going to ask Claire Bisseker and George Herman to offer their thoughts, which you can then choose to react to or not, if you care to, in the final minutes, Minister. My final question is this. Last week in our webinar, we talked about the relationship between SONA and the budget. We talked about coming back to whole government thinking and strategy. After SONA, I heard you use I thought was a rather cryptic remark. You said something like, well, the president has set his priorities. Let's see if we can find a way of funding them. It felt as if the left hand and the right hand were not necessarily working together. What can you tell us to reassure us that Treasury, National Treasury, this is such an important part of government, is integrated in the strategic thinking and the prioritization of the president?
Gives content to the SONA.
Sorry, Minister, can you repeat that? Your line was very bad.
Even in the opening paragraph, yeah, we're saying this budget is giving content to SONA. Even the opening paragraph, we start by making reference to what the president has said. So what are the key things which this budget talks about, which is a message from the president? The first one was economic recovery. A lot of work has been done. You can go through the speech, which says, what are we doing to support what the president has said in economic recovery? The president has then said, including in that economic recovery, we have infrastructure and other things which are contained there. The president has then said the second leg of that is income support. And we've gone to town in dealing with that. We have done the income support, including the extension of the SRG grant. I said maybe I was misunderstood. Someone was asking me this question. I said, there's no way the president could make such a major announcement without making reference to his Minister of Finance. That's what I thought at the time, because the president would not have gone that far without informing the Minister of Finance. So there's common strategic thinking.
Very well. Thank you, Minister. I'm going to now shift to Claire Bisseker first.
It doesn't mean it's normally is the hug and kiss. It's a strategic thinking where we fight over these issues and find each other.
Yes, of course. And the president and you yesterday used this expression, trade-offs.
Yeah.
I feel, and I'm being politically optimistic here, that this is a government that is now willing to wrestle with the trade-offs in a much more serious fashion than it has perhaps in the past few years. That's my political analysis. You can take it or leave it, anybody on this call. Claire, let me draw you in. You wrote the cover story, the Goldilocks positive story on the front page of today's Financial Mail. What's, particularly listening to Minister now, what are your thoughts on the budget?
Well, the Minister really just elaborated on everything he said in the press conference yesterday. So I think really what the overriding concern is that the rest of government will prove unable to adhere to the Treasury's spending restraint or to expedite the reforms that are really necessary to boost growth. And until we see proof of stronger growth leading to sustainably stronger revenues, while expenditure is held in check, the government's new, or the Treasury's new improved debt stabilization trajectory will remain in doubt. And I personally will eat my hat if we achieve a primary surplus next year, a year ahead of schedule. It's because our track record with reform and growth is so poor. I'm not alone in that view, but there are economists who are much more bullish. RMB Morgan Stanley thinks we'll achieve that primary surplus 2 years ahead of schedule. You know, they are so bullish on commodity prices, they think we'll get another 160 billion revenue overrun in the coming year, and debt will drop to 65% of GDP. The other way to get there would be through a really comprehensive, swift, dramatic reform program, which gets us 3% growth, and that's the IMF's upside scenario. But what is telling is that neither the IMF nor the National Treasury have that as their base case. The National Treasury's own growth forecast is for growth to average only 1.8% over the medium term. So they're only expecting about half of the reform package to really be implemented. And I think that is really a telling position that the Treasury is in. And if they don't even believe it, how can the rest of us believe it? I think there is a split view on the reform process. You either think that momentum is building and we just have to be patient, the small incremental reforms will pay off, or you think that we've squandered this window of opportunity of the last 3 or 4 years, that structural reform is not actually working, and we cannot continue with this piecemeal, one step forward, one step back approach. It's not catalyzing private investment and growth, and we're squandering the goodwill of the private sector. Something has to change, and I'm in that latter camp. And I think that unless we really pull our socks up, we are facing a future in which growth is actually going to dwindle, debt is not going to stabilize, and it's going to creep up towards 80% and higher.
Claire, thank you. The Minister said we must be realistic. You're throwing a big bucket of realism on this budget. I'm going to ask George to offer his 2 cents worth, and then Claire, I'm going to throw something back to you. You bandied around the word structural reform. The Minister spoke yesterday of an expanded reform agenda. These phrases mean different things to different people. What exactly are we talking about here when we say structural reform? But I'll come back to you on that. George, over to you. Your thoughts on the budget from a market and kind of capital wealth perspective.
I'll start where Claire, one of the points she touched on is this very bullish scenario sketched into the future. And yes, that is a good case scenario, but the reality is global growth is slowing down and global liquidity is tightening. And so there's also a different scenario to that one. And hence, I was very pleased, and so were the markets overall yesterday, that the Minister he acknowledged that this commodity windfall on revenue was temporary and that that shouldn't be banked on permanently in future. That was a very responsible thing, and I think that was the overall theme that carried through. It also allowed him to reduce the corporate income tax rate by 1%, and according to your conversation earlier, Richard, that rhymed very well with what was said in SONA. Also, the fact that there wasn't any increase in the fuel levy or the road accident fund levies, considering where we are in the inflation cycle and specifically on fuel prices, that was very welcome. We also have to applaud the harmonization of the offshore investment limits that was established, and we think that that is a very responsible thing and a good thing for everybody overall. Then kind of deeper into the conversation of the budget is that I think the Minister committed that during the course of 2022, crypto and digital assets will be included in the regulatory framework, and we applaud that and think that that is a good step in the right direction. On the other side, though, when you talk about the reality and the concerns, I absolutely concur with Claire that if you just do the back of a matchbox calculation, an economy that is growing in nominal terms at our inflation target 4.5 plus the, let's call it 2% real, that's 6.5%, whilst debt service cost is growing at in excess of 10%, and that is the fastest growing component of the expenditure side of the budget. It's just a matter of time before that leads to a debt crisis. And then, despite the minister making lighthearted of his comments around the Regulation 28, we are looking forward to further clarity and finalization on the issues regarding Regulation 28, which he promised us in March. So look forward to that. Thanks, Richard.
Thank you very much, George. Minister Godongwana would have heard what you said then, and he'll choose to either take it into account and or respond in a few moments as we close off. Claire, back to you. I put this question to you. What exactly do you mean by structural reform?
Well, I think everyone understands it to mean the key priorities that the government has set out for itself. It's all about, essentially, it's about fixing our network logistics system in this country. It's incredibly costly and it's incredibly inefficient. So it's about ports, it's about rail, it's about telecoms, it's about getting goods exports to market more efficiently. And the minister talked earlier about his phone call at Christmas time from the coal exporters who couldn't get 15 billion rands worth of coal to Richards Bay. It's exactly what we're talking about when we talk about structural reform. And it's taking way too long.
Okay, that's interesting. So it sounds to me that it's really just about doing things better, being a bit more efficient and effective in government. I thought structural reform was when you decide, for example, to privatize and move away from a developmental state, or some such much more strategic or ideological even shift in economic management. Minister Godongwana, if you'd be so kind as to turn on your video again and rejoin us, what do you? Yesterday, you used the expression expanded reform agenda. You didn't use structural reform, but I think you meant the same. You were saying that in order to get the growth, and I think you're agreeing in principle, at least, with Mr. Herman and Ms. Bisseker, when they say that for long-term growth, you're going to have to get some real shifts in the way government delivers and services are delivered. Am I being fair on that?
No, you're being fair. My challenge to Claire is that when that day comes, we reach a primary surplus. Can we call a conference, press conference, and watch it hat?
her hat or your hat, Minister? I suppose that's the question, isn't it?
Look, I mean, the first thing we make, that's why people are saying we underestimate revenue. We make an assumption about growth. If we've made an assumption of 1.8, therefore, arising out of that, we model what kind of revenue we're likely to get. So I'm quite confident that what we have put forward in terms of the fiscal framework is achievable. That's the first point. The second point, when we talk about the reform agenda, is Claire has mentioned one part of the reform agenda, which is restructuring the network industries in order to ensure a competitive environment and efficiency gains. But there should be a bigger part of the reform agenda, which includes the efficiency of the state, how the state deliver goods and services, which comes to a point, Prof. In the breakfast today, I mentioned one example of one of my conservative guys here who was a very efficient, technically competent, but very conservative, a typical IMF fellow. He says to me, listen, Minister, is carrying a cup of coffee, says, listen, Minister, you still meet us about infrastructure funding and so on. Your challenge is not money. Your challenge is how you deliver the services. He then used an example. Why can't we take Group 5 or any of these companies and say to them, build all the schools, all right? We'll give you the money. He says we can finish all the schools in 2 years, all right? So part of that reform agenda is not only how to structure the network industries, as Claire is saying, but also how do you reform government to be agile and be able to deliver service on time. I was in a meeting. It's my first meeting. I'm new in government. I'm called in a meeting to discuss a disaster. The presentation is the same thing I read in newspapers the previous day. Right? I posed the question too. I said, why, when a disaster happens, you can't send experts the following day in the area? Right? Experts come to us and tell us what to be done. That's one part. Secondly, we have an agile procurement process which responds to a disaster. I'm using these examples to say that the reform agenda must be bigger than making the network industries function, but we must also reform how government does things. So that's the major things that we're beginning to challenge. I think, I said to the president on Tuesday, so the president, we've been talking about this infrastructure fund, said, okay, it's in place, we've got the money, we've got the private sector ready. The problem is we don't have the pipeline. Let me tell you the following. I'm not going to be complaining and say the departments are not giving us pipelines. I'm going to go and get the pipeline. Right? He then said, okay, you're right, but go and also check the value for money, because I was in a place where they were paying 12 million per kilometer. Right? So all of that is part of the reform agenda that we need to be talking about. I hope that answers your question, Prof.
It does, and it sounds to me as if you're talking about, more than anything, organizational culture and the ability of the organization of government to be more efficient, more effective, more nimble. Excuse me. And that does chime very well with what the president said. My reading of SONA was that the president was saying, regrettably, I am the head of what is largely now an incapable state. And of course, there are, of course, islands of capability, including the National Treasury. And that's why you've got this move to have significant functions moved into the presidency, which is interesting and has been attracted criticism.
No, but in some instances, let me defend the president. In some instances, it's not moving functions. It's strengthening coordination of the functions. Let me just give you what we call the red tape issue. There are a lot of us, including Treasury. We are supposed to be monitoring a red tape, monitoring 30-day payment, monitoring a whole range of issues. But we've put 1,001 other functions, right? So it's not a core function. So what the president is doing with bringing and goes is to say, you see the wording, the formulation is that thing. It says working with the departments and other agencies, because what that function does is to coordinate the functions of all of us, what we do. Something we take as trivial because it's not our core function.
I accept that, Minister. And by the way, I'm very much on the president and your side on this. I think it's absolutely right that the presidency should have more power and muscle to lead and drive the strategic priorities of government. So I don't like it when people talk about an imperial presidency, often the same people who complain about the lack of effectiveness in oversight and leadership from the presidency. You really can't have it both ways. So we have to be fair in our analysis and criticism. Excuse me, Minister, we're out of time. I know you've got pressing other engagements. Thank you very much for your time. Thank you for your service. Thank you for the grittiness, but also thank you for the Goldilocks sprinkling of good news yesterday and this delicate balancing act. We wish you well with that. Claire Bisseker, George Herman, thank you for joining this panel, and my partners Citadel and Financial Mail. this was a really interesting conversation. I'm grateful to all of you, and to the audience. I'm sure you found it enlightening and interesting as well. Thank you all very much indeed. Thank you, Minister. All the very best.